Okay, audio looks good. So my name is Hal Grebe. I'm the Emergency Management Director for Jefferson County. And it's, again, my pleasure to welcome everyone here today. Really excited that you've taken the time out of your day and evening to help prepare yourself and make preparedness personal. It's National Preparedness Month this September. It's the theme this year in 2022 is "The life you've built is worth protecting. Prepare for disasters to create a lasting legacy for you and your family." And we're really excited that United Policyholders is here to help us learn more about how we can take care of ourselves, our homes, and making sure that we can learn from the hard lessons learned from our neighbor and make sure that we can be more resilient and prepared as a community. So thanks again for taking the time out of your day. And please, 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 we've all got friends and families that aren't here today. So after you leave today, take what you've learned, advocate for preparedness to your community, your friends and family and loved ones. We greatly appreciate you sharing this message of preparedness throughout your community. And with that, I'll turn it over to Emily Rogan to take the rest of the training. Thanks again.
All right, thank you so much for that introduction. I really appreciate you and everybody who has come out to listen to a webinar on preparedness, especially insurance preparedness, on this evening. So I'm going to get into it and tell you first a little bit about United Policyholders. We have a really insurancy name, but the very first thing I want you to know is that we are a nonprofit organization. We are a voice and an information resource for insurance consumers. So basically anything you want or need to know about insurance, we are a consumer group to help you out. We have been around for over 30 years, and we were founded right before the Oakland-Berkeley firestorm in California, and we are a national organization. But the most important thing I want you to know too is that we like to say we're not for profit and not for sale, which means we don't take any money from insurance companies, and we don't sell insurance. Despite our insurancy name, we are just here to help people. And I think that's a really important point because we're going to be going over things, especially when we do preparedness presentations. We're going to be going over things of like, you might want to make sure your safety net is a little fuller, or if you need to, if we're giving you advice on how to buy insurance, we want you to know that it's coming from a place of the tips from the trenches, what we've learned on the ground and what we want to pay forward. We're a pretty small organization considering we are a national organization, but we have this great volunteer corps of both people who have personal expertise and professional expertise in disaster recovery. On the personal side, those are people who have lost their homes in disasters, learned way too much about insurance, and decided to pay it forward. So I was very excited to make this little collage about our work in Colorado. We have been around for a while. Helping in your state. We do most of our work through our Roadmap to Recovery program, which helps people after disasters, help them through the claims process. It's not as easy as it may seem on TV. You don't just kind of like snap your finger and the check is there and your home is back. It's a process. And we have been helping people in Colorado since the 2010 4 Mile Canyon fire. We were there, and then unfortunately, we had a lot of work back to back for the High Park and Woodland Heights fire, Waldo Canyon, Black Forest, that was all the same area back to back, and then the large flood that happened as well. And then we had a little break, and then recently with the 2020 wildfires, and most recently with the Marshall fire, where we are still continuing to offer our Roadmap to Recovery services there. In terms of preparedness, we've always tried to complete our Roadmap to Recovery services, to complete our work in an area with giving back to the larger community of like, okay, well, this happened, we know it can happen again, and it being some sort of disaster. How can we make sure this community is more prepared? And that's why I'm so happy that everyone here is joining us to really learn about what happened and what you can do. We did get a grant to do preparedness work in Colorado in 2020 with Erica at Jefferson County. Thank you so much for that. You really championed that, getting that effort to get us into this preparedness zone. And then advocacy and action, our third program helps change laws and stand up for consumers, whether it is in the legislature or public policy forums, in the media. to make sure that the consumer voice is heard, but also see how can we change some of these difficult pieces that disaster survivors have. What can we do to change the law to make it easier for the next generation of disaster survivors? And we have had success in your state. In 2013, so, at the tail end of our first, big stream of disasters, we were able to change the law with the 2013 Colorado Home Insurance Reform Act. And then again this year, there were quite a few of your elected officials that really listened to, what they could, how can we make it easier? And we got HB 22-1111 passed, and that's insurance coverage for loss declared fire disaster, basically wildfire losses, or, these big declared disasters. So it can be declared by the state, by FEMA as well. And we've got some really good reforms passed there. Here's a little picture of the bill signing, which we were happy to have our representatives and a couple volunteers attend. And what it does, and as you read this, you're going to say, whoa, there's a lot of lingo here. And all of insurance and all of the insurance claim process has a lot of lingo, and they all mean something different to how you can use your insurance. But we were able to get these wonderful things passed with this recent law that will help the next generation of disaster survivors, but also provide leverage, which is super important for the Marshall Fire survivors, for how, that now this is the law and we deserve these same benefits as well, because it is this difficult and we all can agree on that. So I like to start with the framing a little bit about, why we're going to be spending so much time talking about insurance. And the main thing is that it is that insurance money that is the number one source of money that people get after disasters to rebuild and recover. FEMA money is needs-based. The max grants are $35 for other needs, $35 for your structure. That's not enough to rebuild a house, $35,000. There are loans at the Small Business Administration, which administers loans to disaster survivors, not just businesses, but they take time to, get the money flowing, and they have to be repaid. And then again, charitable aid and other nonprofits, they come to town, they are embedded in the community, they are a huge part of the recovery effort. But it's, it's for basic needs, it's for emergency assistance, not necessarily the cost of rebuilding your home. So if you are a homeowner or even renters who want to have that flexibility, we'll talk a little bit about renters insurance. The quick and dirty is it's worth it. Please buy it. Make sure your coverage is what you would need. But for homeowners, it's really that insurance piece that will be the make or break in whether or not you're able to rebuild and the speed of which you'll be able to go home. But it's not that easy to use sometimes. We see a lot of problems after disasters. And these problems they kind of flow out in two different categories of problems. We have coverage problems, which means people just don't have enough insurance. We call that problem underinsurance. That's the biggest problem that we see after disasters. And then there are also a lot of claim problems. How is the process working to get that money flowing? And with claim problems, our Roadmap to Recovery program has a ton of resources to help you overcome any obstacles in the claim process. But those coverage problems can be very difficult to solve afterwards. And that's why we're here. This is a little bit of a snapshot of the first really 2 months of our Marshall Fire recovery. We're still offering workshops and webinars to help people. So these are all claim problems. We do an insurance orientation, how to read your policy, what's inside it, navigating the dwelling portion, a little bit on taxes. And then we go into, financial decisions on if you're going to buy or rebuild, how overcoming of obstacles, really intensives on doing your home inventory. We've got a whole program, and it is a multi-year program that we help people. And so we've got the claim. We've got resources to help you with the claim problem, but the coverage problems, that underinsurance, is difficult to solve. And really what we see is that about 2/3 of total loss disaster survivors find that they do not have enough insurance to rebuild their home as it was. So they paid for insurance the entire time they had a home. They finally need it. It's burnt to the ground or some other loss. And two out of three people look to the person on your Zoom left and your Zoom right. And only one of you will have enough insurance if something happens to rebuild your home as it was. That's a really telling statistic, and we see it after disaster, after disaster, after disaster. So what you're seeing on the screen is the 2020 wildfire survey. The average amount people were underinsured by was $355,000. That six-figure amount is something we see after every disaster too. So 2/3 are underinsured by six figures. It's astonishing. It's very difficult. I'm bringing you preliminary survey results from our Marshall Fire survey. We conducted it at the 6-month mark. We're a little past that. We're still working hard to clean up some of the data, but we're seeing really high levels of underinsurance. Unofficial results show over 2/3, that it was around 70%, but we're going to tighten that up and put it in an official report. And also very strict home inventory requirements. Over half of people, over 50% had to write down every single item that they lost in a fire where we know there's no question about what happened of the cause of loss. We know it was this fire, and yet insurance companies are requiring their policyholder to write everything down, every single thing, in order to get that money flowing. It's very difficult. And then I put a couple quotes in there just to kind of get the feel. These are, at the end of our surveys, we say, well, is there anything else you'd like to share? And I just put two. We've had an incredibly difficult time getting our policy limits despite a total loss. You'd think a total loss means you automatically get max payout. And even then, we know we were underinsured. It's hard. It's hard. We're hearing that it's hard. Thank you for being there when I was feeling the most vulnerable and helpless. The advice I received gave me confidence and information I need to communicate better with my insurance company. And the key there is that it's a very personal thing to lose your home in any sort of disaster, have to move out, have to do these big repairs. A lot of times you're separated from your community. And yet it's a business negotiation that you're dealing with as well. The insurance company deals with it like a business negotiation, and helping people flip that mindset that, yes, this is very personal, but we have to communicate in writing. We have to ask for what we need. The way you communicate will help get that money flowing. So now that we've kind of set the stage of why it's so important to look at your insurance before you need it, here are your action steps. We want you at the end of this, and we're going to go into details. In some of these, we'll go more into detail. Some of these we won't. But here are the things that we want you to do, the preparedness action steps that we want you to take. We want you to contact your insurance agent and do an insurance checkup. And what that means is to communicate with them and figure out, do you have the right kind and right amount of insurance? If something were to happen, like the Marshall Fire, would you be able to rebuild your home? How can you better support your safety net? We want you to do a home inventory to inventory your assets, and we'll go a little deeper into that. Scan important documents and store them off-site. And then also take a few steps to reduce your wildfire risk. And I would like to expand that, to take a few steps to reduce your risks. If you take steps to make your home safer from flooding, if that's the area you're in, take steps to harden your home to make it more resilient. Okay, step one, create a home inventory. My closet does not look like this. It is in fact very cluttered, and I cannot see everything in it. And that's just one part of my home. To do a home inventory, what we want you to do is use the technology that works for you. And whether it's taking pictures with your iPhone and sending them to the cloud, whether it's doing a video and opening up drawers and sending that to an iCloud, then that's great too. We want you to, but if you don't know what the cloud is or how to access it, that technology and that inventory might not be as helpful as if you were to just take actual photos, print them out, and send them to somebody that you trust out of state. So if it's safer for you to do that, then send it to a friend or a family member out of state. But if you don't trust your sister that she'll save them in a safe place, don't send them to her. Do something that would make it easy for you that if you did have to go over this strenuous process of writing down everything you had, when you got it, how much you paid for it, how long you've had it, that you'd be able to do this easier. We do a lot of work, by the way, to help people not have to do that very strict requirement. But that's on the claim side. But any record of your house inside and out will make it so much easier for you if you have a loss. The second thing we want you to do is to store your important documents off-site. Have a copy of your insurance documents, your home inventory, and then, driver's license and medical cards. This isn't, disasters are becoming more frequent. A lot of the local assistance centers, which are created to help people as one-stop shops afterwards, they'll help you replace some of these things, but it's still kind of a pain, right? So either store them off-site, store copies off-site, or even make sure you have a grab and go. And a lot of preparedness messaging is about how to prepare to respond in the emergency for life safety. And we encourage you to absolutely learn more about what you can do in that sense. We're talking more about what you could do now to make a recovery easier, right? If you had copies of your house deeds, of any sort of thing like that, blueprints of your house, store them off-site, and that will be a big help. A lot of disaster survivors wish they had more copies of things, but then also to make a plan for photos and the really special things in your home. Those pieces are often, people say they're irreplaceable, and they are. This is a picture actually of my family, of my great grandmother. And, it's, but for, having, digital copies of things, just anything you can do, really, that's another really hard loss for people, is when they lose things that are really irreplaceable. So just as you prepare, take little steps here and there, and each one of them matters. Okay, now we're going to go into the meat of it. To do a home insurance checkup, the first thing we want you to do is to review your declarations page. And I'll show you a couple copies of what that might look like if you're unaware what a declarations page, another, insurance lingo term. But they have, it's a piece of paper, and it'll have your name on it. It'll have your address on it. It will have 4 buckets of coverage, as you can see. And what you've bought, your insurance policy, has your dwelling coverage, your contents coverage, your other structures coverage, and then your loss of use. So that's how loss of use is how much money you have to stay somewhere else while your home is being repaired. So you still have to pay your mortgage after a disaster, but you now also have to pay rent somewhere else to stay. So you want to make sure you have enough of that. We've been hearing that there is the insurance commissioner of Colorado said that policies should not have a dollar limit in them. So it might be a time limit, one of the two. But anyways, you want to double check what your policy has, because not all policies are alike, even with the same insurance company. The reason I paused on that is because I was just deep in our survey results, and I saw that the Marshall Fire survivors said that they did have a dollar limit, did have a time limit, and some of them have both, which contradicts it, which is a really big benefit to us doing the survey, is being able to see what actually is in people's policies, right? Because they're all different. Different companies have different language, different limits, and that sort of thing. So your declarations page will have that. It will also have endorsements, which add or remove coverage, and then also deductibles. And deductibles are a really important piece as well. So here's a sample of what it might look like, and I'm hoping you can see my mouse as well. You have these 4 buckets of coverage. 4 buckets of coverage. You have how much you would have for your coverage A. That seems a little low, but you will also have your square footage on your declarations page, so you want to double check that as well. Your personal property, that's how much you would have for your contents. And then your coverage D, sometimes it's called loss of use on your deck page, sometimes it's called additional living expense coverage. This one here says unlimited, so no dollar amount, but it does have up to 12 months. Your insurance agent is required by law to offer you up to 24 months. So double check that you do have up to 24 months. That's a really important piece of how you can make sure that you have enough coverage just in case you do have a loss, because rarely do people get back home by 2 years. And if they do, they're doing great. And if they don't, there's still time. Complete with their insurance claim and completely rebuilt. Okay, other things you might see, your deductibles. This policy here has it has 2 deductibles. It has a wind and hail and an other perils. It's really important that you get to know your deductibles. All other perils is a flat dollar amount, 1,000, and wind and hail, this one is actually a percentage, 1%. 1% isn't bad. If you see 10% or something really high, that might come as a surprise if you actually have to use your homeowner's insurance for something, for damage that was caused by wind and hail. So really check that, because it could be a percentage and it could be a dollar amount. And then just a little bit about how deductibles work. I hope everyone knows. If you were to file a claim and the damage was less than your deductible, so say you had hail damage and it really caused only $2,500 worth of damage, you would file a claim. We would not recommend that, but if you were to file a claim, you would not get any money from your policy because the damage did not exceed your deductible. So that's that's part of it. So really get to know that, find that piece. And then you might also have a few discounts down here as well. You might see discounts on your policy. That's good. And then here's another version up here. Here's another sample policy. It looks a little different, but again, you have those buckets of coverage. This was a California policy here. And then you can see that you have endorsements down here, special limits, right? And then here's the deductible right here. You have one deductible right here. All right, so when you find your declarations page, we want you to dust it off. We want you to check the details. Is the square footage of living space correct? If you have something that might be considered, maybe you have like, if you have a furnished area in, say, a garage or a basement that you really considered furnished area and you have made it part of your home, make sure that that square footage is included in your policy. Make sure your coverage A limit, the cost you have to rebuild right here, is enough to rebuild for a total loss. That's a really big thing. And both of these policies had 300,000, and I'm flipping over here back to 385. Those are pretty low. Those are pretty low unless they're very small homes. What we're seeing is more around the 400 per square foot to rebuild. It varies in every, after every disaster, that dollar amount can shift a little. But the key here is that you have something called extended replacement cost percentage. So you want to make sure your dwelling limit is enough to rebuild your home in, say, normal times, say like house fire times. They're still awful. However, in non-disaster times, that number should be enough. And then if it is a total loss, then your extended replacement coverage kicks in, and that is what's going to make sure you have enough to rebuild. So extended replacement cost in Colorado, there's a law that you must be offered 20% extended replacement cost coverage. Your insurance agent must offer that to you. Doesn't mean that they have to write that in your policy, but you have to be offered that amount. Ask for more. That's one of those things that it's a piece of a policy that is so inexpensive to add that if you just ask, well, what other levels do you offer? Do you offer 50%? Do you offer more than 50%? And how much would it cost to increase those? It might be a lot more inexpensive, and it's this total loss multiplier that really makes sense and really can comes in very handy if you have a total loss. The next thing we want you to do in your home insurance checkup is to check your ALE. That says that the law in Colorado is that you must have been offered 24 months. You want to have at least 24 months. So double check that you have that coverage as well. And then if you live in an HOA, when you do your home insurance checkup, see if you can get your HOA master policy and give that to your agent. and to see if there are any holes. Are there any gaps? Do you need a loss assessment coverage? Do you have that in your policy? That's a really handy thing. It's called loss assessment coverage. That's what you would ask for if you have an HOA. And then again, take notes, follow up in writing, and make your insurance goals be known. I think I have another slide on that one a little bit later. But you know, that's our main thing. You want to go through these pieces with your agent, getting the big number right, your coverage A. The most important thing there is how much would you need to rebuild per square foot? And you can do that by, you know, calling local contractors is a really important piece. And, you know, we're going to have a lot of data very quickly from the Marshall Fire on how much it actually did cost to rebuild per square foot. A lot of people have different kinds of homes, but that is something that is a pretty, it's interesting after disasters how we have so much more data, and it seems that the insurance companies do not have that data, or they're not willing to accurately insure people, even though they just were part of this claim process, very close. So on our website, you can get your home insurance checkup list. So those are all the questions that we're kind of talking about. You know, I said, you know, you want to make sure, you know, you have this checkup with them. But as I said, that how insurance has a lot of lingo, we kind of write the questions out for you so that you'd be able to kind of understand how you'd be able to ask it to make sure it's covered. And again, if anyone's out there knows how to screenshot their computer or their phone, these are the main things. You want to have enough dwelling coverage, extended replacement cost coverage, that percentage as much as you can, knowing what your deductible is. Your loss of use coverage is a really important thing. As much as you, you know, that's 12 months is often not enough. Get it up to 24. Having replacement cost coverage. Building code upgrade coverage is a really important one. You want to make sure you have that. And then also at the very end, I say know your exclusions, know what's not covered. And we'll go a little bit deeper into that down the presentation. And so when it's time for the insurance checkup, take notes. Be sure you take notes. We want to make sure that there is some sort of documentation there. So if you call up your insurance agent and say, hi, this, you know, I'm just looking at my deck page, want to make sure I have enough coverage. You know, I'm concerned about it because of the recent Marshall Fire. And your insurance agent goes, you are covered. Oh my goodness, I know it's so scary, but yeah, looks good. That feels really good, but there's no documentation that happens. I had a fire survivor email us in maybe the second week of January, right after they had the fire. And you know, he said something that is very common for us to hear, which is, you know, I recently talked to my agent and I'm pretty sure I'm covered. They said I'm nervous, I'm not covered. And it had happened so soon. He had talked to him maybe less than a month ago. And so, you know, he didn't have any documentation that he had called this person. They didn't follow up in an email. They didn't, you know, have any handwritten notes with anything like that. But we said, okay, well, you know, these days, a lot of times there's always some sort of record. And so I said, okay, well, if you know, write him an email right now and just say, thank you so much for connecting with me a couple of weeks ago. Man, who would have known that this big wildfire happened? Thank you for making sure that I have enough coverage. I'm glad that we talked on the phone on this date, right? And then I had him screenshot, you know how you can go on your phone and see your call history? He still had that, so he could find where he called them, screenshotted it, and it's, you know, it said his agent's phone number, and it had the amount of time they talked, which was a substantial amount, right? So there's something there, right? There is some sort of paper trail. If there's no paper trail, then unfortunately your limits are off. You're often held to just what you have in your policy. And you know, most people set their limits when they buy their house, and then just pay the same bill, and they don't know. They just don't know. And it's very heartbreaking when you've been very loyal to a company, and then they're not able to keep up their promise of making you whole again. One more other thing, follow up if you have any unanswered questions. That's a really good one. You know, I'm gonna talk to you guys for about an hour, but when we're talking about insurance, there's so much to talk about, and there's so much lingo and so many little things. Go over scenarios, really dive into it if you need to. There are no dumb questions. A lot of this is really complicated. And so feel free to, you know, just follow up with questions if you have them. That's okay too. Okay, we're going to talk about the National Flood Insurance Program. When we're talking about exclusions and what isn't covered by your policy, most policies do not cover flood. So no, do not cover flooding. That usually means that the water comes from below. You know, rainwater is covered in your home policy if something happens. If there's wind, your wind deductible might kick in, but it's covered. But flood insurance, flood is separate. So if there's damage from a flood, which is where the water comes up and in, that's not covered by your homeowner's insurance policy. You have to add that coverage. So while you're doing your home insurance checkup, you might want to, and you do, if you do not have flood insurance, then it makes sense to ask them for a quote for flood insurance. Now, there is a 30-day waiting period to start a program with the National Flood Insurance Program. The National Flood Insurance Program is one of the most common flood insurers. They were started quite a long time ago. I want to say the 70s, maybe earlier, when, you know, after the Mississippi River flooded quite a few times, insurance companies, like they do sometimes, say, we don't want this risk anymore. We're carving this out of our policies. We are no longer covering flood. And so it is now part of a FEMA program. It's under FEMA, and the National Flood Insurance Program covers flood insurance for everybody. There are private flood insurers as well, so it's not your only option. We definitely recommend, if this is something that you're interested in, to also get another quote from a private flood insurance company. That just means any company other than the National Flood Insurance Program. And make the right decision for yourself. Because it is a public program, and because it isn't a traditional insurer, it's a very bare bones policy that you get with the National Flood Insurance Program. So residential limits, the most you can buy is $250,000 of coverage. For contents that's separate, you have to add it into your policy. You have to specifically add it in, and it caps out on $100,000, and that excludes below grade content. So anything that is below street level. So if in your home you walk in and you walk down 2 stairs, then that contents would not be covered. It is just everything that's above grade, right? So there are exclusions. It is very bare bones, and it does not include additional living expense coverage. So if you do buy it and you have damage to your home and you have to live somewhere else, you still have to pay your mortgage, and you will have to pay for a temporary rental as well. So flood is a pretty devastating loss. You know, we did work the flood in your area, gosh, almost 10 years ago, right? And it's very difficult. They have very strict requirements in the claims process as well. So again, it is this hole in homeowners insurance policies, and we want to make sure you're aware of it and can work to fill it if you need to. So there is something called flood factor. A lot, you know, I don't mean to you know, scare people into, you know, thinking that, you know, the big one is right around the corner, even though most of us who work in either emergency management or, you know, nonprofits that respond often do walk around like, is this it? Is this it? Is this an earthquake? Oh, it's just the bus going by. We're good. But you know, it's just something to keep in mind. There is something, we want you to be aware of what your risks are. Make smart financial decisions. Just ask what would happen if we did have flood damage. And these days we have a lot more ways to tell what our risks are, down to our specific house. So there is something called flood factor, and you can enter your address and find out, you know, what are the odds of, you know, what is your flood risk. I did a presentation like this for the city of Arvada, and in the 80005 area code, there were 343 homes that had some flood risks. So not all of them, but some of them did, right? And if you don't have that much of a flood risk, the policy will be fairly inexpensive. That's a good thing. If you have a lot of flood risk, your mortgage company will require you to buy it. But in the middle, there are quite a few people who are in the middle of there who have some flood risk, but not enough for their insurance company to require it. And because of that, a lot of times they end up being devastated because they just didn't know that they could add it. And so we always recommend just getting a quote, seeing if it is if it would be beneficial to make sure your home is really covered. All right, you don't need to be in a flood zone to benefit from flood insurance. It might not be required by your lender, so keep that in mind. And then there are private flood insurance as well. So I kind of went over that. FEMA has a map as well. Floodfactor.com has another map. And then again, 30-day waiting period if you buy a national flood insurance program. So you can't see the forecast and say, uh-oh, it's coming, I better buy it. That's not the way to go. And then the other thing I wanted to mention is that, flooding after wildfires do happen. This is right from FEMA, because wildfires can dramatically alter the terrain, right? So sometimes if you're down, downstream or no stream, the fire can so dramatically change a place that you're at an increase for flooding. And then just to keep in mind, chocolate shake versus chocolate cake. That's kind of like a little way that it's easy for us to remember that for flood insurance, chocolate shake, meaning very liquidy rivers are covered, but chocolate cake of that is earth movement, and that is not covered by flood insurance. The wonderful world of exclusions, right? Everything has a definition and is covered or isn't covered in the policy. That's why they're so thick, because they really make them difficult to understand. And there is terminology here, but we have had some success as well when there is a flooding event that happens so soon after a wildfire. Sometimes some municipalities have really stood up for their community and were able to draw a direct line that it was actually because of the fire that this happened, and we're able to find people coverage. But it's very difficult, extremely difficult. And if you have coverage, then you're better off for sure. Okay, we're getting towards the meaty end of the program. Thank you all for sticking on. I'm pretty impressed that we haven't had that much movement. Everyone's engaged and wonderful. So this is the fun part, how to reduce your premiums. I spent a lot of time talking about what you need to build up to build the safety net. But you can reduce it by either raising your premium. So you can ask for, when you talk to your agent, if you were to raise what different levels of deductible do they offer? And if you were to raise it from, say, 1,000 to 2,500 or 5,000, how much would that bring down your annual premium? That's a really easy way to reduce your annual costs. And also, it's a way to protect you from making small claims. If, insurance is what we're seeing in California, which we're a little bit ahead, I think, in terms of having people be dropped by their insurance. If you have a smaller claim, if you put a claim on your record for that little thing, it might have a big impact in your ability to have an affordable premium in the future. So it's this big give and take, but one way to reduce your premium is to raise your deductible. Be aware if it's a percentage deductible, because those little differences in levels can be actually really big, and you don't want to not be able to use your insurance if you need it as well. Again, you can bundle, you can take advantage of discounts with bundling your insurance. See if there are any discounts for using fire resistant materials, or just ask them, what kind of discounts do you offer? And then you can also check your clue report, which is a way where you're able to put in your address and you can see what your claim history is. So it's kind of like a credit report, but instead of with credit cards and credit, it's with claims. So that's kind of a fun thing. You can look up your clue report and they'll send it to you in the mail. And then if you fix any errors, that might reduce your premiums. And then harden your home. This is a really important thing. Take those steps if you can to make your home more resistant from fire. You guys have a wonderful program in Western Boulder County called Wildfire Partners. And because, you know, they only help people in Western Boulder County, you might not be able to qualify for the financial award where they help you with the mitigation thing, but the steps that they take and the process of how you can harden your home is a really important one. So you can look up information on what to do there. Also, the Institute for Home and Business Safety also has suburban wildfire adaptation roadmaps. So that's the same. It's kind of like in the WUI area. What can you do to make sure that you can harden your home? And United Policyholders also has a lot of resources. You know, we are helping set standards in California to make sure that if a homeowner does this, you know, mitigates their home, does this checklist, that they're able to receive a discount or receive a preferred pricing for taking those steps and doing that work to harden their home and be more resistant and resilient for wildfires. Okay, and then finally, if you're dropped by your insurance company, it can be very painful if you're dropped by your insurance company. It's basically your insurance company saying, we don't want you as a customer. So insurers write policies year to year. So on your declarations page, you'd be able to see the date and it would say April 1st, 2022 to March 31st, 2023. And that's what you buy. And you usually buy the same product year after year after year. But if you're dropped by your insurance company, then your insurance company is deciding that they don't want you as a customer and they don't want to sell you that product. It's different from being canceled. If you're canceled by your insurance company, maybe you missed a payment or something to that effect, where they're saying you made a mistake or you weren't forthcoming about some feature of your house, and we're canceling this policy, you know, midterm, the end, right? So different. But if this happens, it can be a little disconcerting because they usually give you 30 days notice, but we want you to don't panic, but just start shopping around. Ask your neighbors who they're insured for, you know, find out, you know, if anyone's bought an insurance recently, you know, what insurance company they used. You know, we have lots of information, a ton on our website. We also want you to, you know, you can contact an independent broker. What they can do is write many different policies. So through many different insurance company, as opposed to, you know, a lot of times the insurance company you see on TV, that agent can only sell you that policy. That's called a captive agent. But an independent agent or broker can shop around for you and do that work for you. We also want you to let the Department of Insurance, the Division of Insurance, know. They're keeping track of it, but they're not going to know how big this problem is unless you as the consumer tell them that you were dropped by your insurance company. The more data they have, the more they're able to make a change. So again, on our website, we have information on if you're dropped by your insurer, uphelp.org/dropped. And that is it. That is the end of my presentation. I just wanted to say thank you to everybody, and I can take a few questions as well. If we're able, you can type them into the chat. Thank you. Thank you so much for listening to this presentation, to being open to being more prepared. And just a reminder that preparedness is it's a state of mind. It's doing little steps here and there. You don't have to do it all at once, but you know, unfortunately, there will probably be smoke in the air again. And we want you to remember that when that happens, it's not a time you need to, you know, to panic. It's a time to just check your preparedness supplies, check your evacuation plan, check, you know, that you have you have everything you need to be resilient and to know that you can get through it on the other end. And your insurance is there if you need it, we hope, and we'll be here to help you. So with that, I'm going to say thank you one more time, and I'm going to stop the recording so that we can take a couple questions as well. So let me see if I can do this, and I'll stop sharing here.